Hello and welcome to Big Deal. I am Nisha Podar. Now remember that alternative investment funds or AIFs embarked on an important journey this year of converting its units into demat form as mandated by market regulator SEBI. Now the timeline for the first stage of dematerializing AIF got over in October and has got the success of 99% adherence. Let's discuss the path-breaking milestone in the AIF industry with experts to understand the process, regulations, and above all, the impact of this on the up-and-coming AIF industry. With Sidharth Pai, Rajeev, Saptarshi, and Ashish, Fafadia. Thank you so much, gentlemen, for joining us right here on CNBC TV 18. Now, Rajeev, my first question, do you think that this mandate coming from SEBI and the AIF industry really applauded it, and was it the need of the hour?
For the long-term growth of the AIF industry, the answer is a clear yes. Given the benefits that public market investors have got through demat, given increased transparency, accuracy, sophistication that typically investors look for, the answer is a definite yes. Also, if you see the rapid increase in the AIF AUM, plus the increase in number of investors investing in AIFs currently, I think time was ripe enough for demat to happen in any case. It was just something that was in the waiting. We couldn't have really postponed it for long. There are also benefits to the regulator in terms of ease of monitoring, easy access to information, because it's very easy for them to get all the information that is required from depositories. Plus, investor protection can be guaranteed through effectively lower operational and fraud risk. So I think the long and short of your question is yes, it was definitely a need of the hour. And that's what I think SEBI has done.
Right, and SEBI has been ahead of many other market regulators across the world. We are probably one of the first few countries probably to look at mandating AIFs. So Sidharth Pai, tell us about the SEBI's thinking. You from IVCA have been in touch with them in incorporating this. What has been the thought process and what has been the success rate?
No, I think so. This is first off a very novel initiative that SEBI has actually taken up so far. We are, after all, alternative in name as well as in operations. It's not a very standardized product. It's actually driven primarily by the contract that you have. So we, through IVCA, the Private Equity Venture Capital CFO Association, worked with the depositories, worked with SEBI, etc., to make sure that the depositories are well aware of what dematting actually entails, what are the unique operating models and modalities offered to the AIFs for that matter, to make sure they end up actually creating a set of frameworks that truly reflects it. They actually went through several iterations, I think 3 or 4 iterations before we ended up coming up across a format that did actually correspond with AIF operations also. SEBI must be lauded for the amount of effort they actually put in. SEBI was instrumental in creating the working groups, getting all the people together, making sure that everyone actually does it. And we've actually achieved 99% coverage as of now. 99% of all AIFs above 500 crores have actually gotten their ISIN right now and have actually dematerialized their units. We're now in the process of actually crediting those units to the investors stage, to the investors' demat accounts also as we speak. Out of 301 AIFs, I think only 2 of them haven't actually gotten their demat done as of the cutoff date of 31st October. So for an alternative industry, for something that's been fairly new and novel to come about, and their rules had to be rewritten, this is truly a great success case. That actually speaks about how SEBI as a regulator works very closely with industry, how industry works with market intermediaries as well to create a global optimum outcome that does actually benefit not just investors, but also the AIF as well as they end up actually scaling up.
Right. And Ashish, joining in this discussion from the venture capital side, you are in touch with several LPs, several foreign investors. How has this move been taken by that community and what is the impact on that?
So, Nisha, this is something that you can understand by breaking this into 3 parts. Part 1 is investors who are looking at coming from overseas, and then there are investors looking at from India. So far as the Indian investors are concerned, I think this is something which is perfectly in line. Most investors do have a very diversified portfolio, where they would have assets allocated in stock markets in general. It's only thereafter that they would start looking at private investments and AIFs, etc. So that side is not something which is a challenge at all. investors that are looking at investing into Indian AIFs from overseas, there would be some degree of challenges and back and forth. But broadly, given that this is a step in the right direction, people to understand where this is coming from, and it overall has a benefit and correlation to the finesse with which the system can operate. So I think it has been received pretty well. We have not seen people push back and say that we are not going to support you. There are teething troubles that we have gone through, and we might have a few things as everybody completes their first cycle over the next 3, 6, 12 months. But broadly, well received. The industry has grown leaps and bounds, and anything that the regulator does in order to bolster the confidence has always two sides of it. The smaller side is that it does create a little bit of a overhaul and extra burden for compliance costs, fees, etc. But in general, this is a step in the right direction. So every participant, whether it is the fund manager or the investor, will accept it willingly and start seeing the benefits in the short term, forget long term.
Right. So it has been applauded by the industry, but you also mentioned the compliance burden. So Rajeev, while we are trying to do ease of investing in India, we are trying to attract investments into India, and compliance burden should be anything but lowered. Do you think that this has taken more of a burden for some of the foreign investors? How feasible is this process, and how adept are we to really meet all the deadlines that have been stipulated? We just crossed one phase.
No, I don't think. See, other than, we do have a lot of large LPs in our funds. Other than queries on processes, a few odd questions here and there, I don't think foreign LPs had, in principle, any large issues in terms of providing demat details or even opening up DP accounts. Yes, it did take some time for them to really understand, possibly for LPs who did not have a DP account, had to go through the painful process of opening a DP account only for AIF investments. But I think they have ultimately accepted the fact that this is a new dawn, and the advantages of having their investments in an electronic form obviously is something that they have fully accepted. So I don't think that there have been any issues as far as we are concerned in getting our offshore LPs to get onboarded on this particular exercise.
So Rajeev, I want to understand that yes, shares have been dematerialized, but now AIFs have been dematerialized. Why not mutual funds? What's the difference?
So that's a question best answered by the regulator. But the way I think about this is, given the fact that AIF as compared to mutual fund is relatively very small, the investor base is concentrated in almost large cities. It would be far easier and quicker for SEBI to have implemented this for AIFs first. Mutual funds, as you're aware, is scattered across the country. Too many small investors. Mutual fund industry is too large. So I think, in my view, they've kind of started off with AIFs first. Also, please understand that as far as AIFs are concerned, we are having a very rapid growth in terms of assets under management as well as number of investors. So I think at some stage, demat for AIFs had become something which was an urgent need of the hour, as I said in the first question. So I think this is something that is my belief. Of course, the regulator may have a different view on this.
Yes.
But you also need to look at the fact that end of the day, SEBI seems to be looking at making both the liability side and the asset side of the AIF work in an electronic format. If you see the recent proposal to have even the investments of AIFs to be done in demat form only, I think this is a very good move overall for the AIF industry in general.
Right. And Sidharth Pai, what do you think about the next steps? We just finished one phase. How do you see the process going? And the industry, is it prepared? Because right now we are dealing with only larger AIFs above 500 crores corpus. Now the smaller ones, are they like geared up for this, and are the processes in place?
I think the processes are in place as of now, because what applies to a large AIF also similarly applies to a small AIF as well. And I don't believe there are any unknown questions as of now in the entire process, given the 99% success rate that the industry is seen as of now. So, but that being said, what all of us are doing as an industry body, along with IBCA, CFO Association, and the depository, etc., we've already started knowledge sessions with the remaining AIFs, so yes, to actually demat their accounts, demat their units as of date. We're already looking at knowledge sessions, we're looking at town halls, we're looking at working papers to come up, we're looking at playbooks looking to create playbooks that helps them to actually end up adhering and actually complying with the regulations that have actually come into force as of now. So it's actually an entire industry effort. For that matter, all of us are actually working together to ensure that this particular thing does actually become a success. And this initiative, I do believe this success initiative can actually set up a template, not just for the dematerialization of all sorts of financial securities and financial assets within the company, within the entire country itself, as we go forward.
Definitely a path-breaking move. Ashish, Fafadia, versus other global economies, how is India now placed in this particular bit? Give us a sense of how many countries are really following this.
I've said this before on television and quoted it as well. When it comes to regulations around financial markets and capital markets, I think we hands down would count in the top 5 easily. On some of these measures that SEBI has taken, specifically coming to the question you meant to ask, I think I don't know how many countries worldwide do have some of these systems and processes that we are starting to institutionalize. And once in a while, you will hear somebody ask a question that is a necessity, but once they start operating with some of these things, they see the benefit of it. So I think overall, it does put us into we have consistently been in the top decile when it comes to some of these stipulations. And we are moving in the right direction. From a confidence building measure, as the growth spurts happen, we are in a position to take care of these things. Let's also not forget that as things move forward, it also opens up possibilities for better products to be launched, whether it's a listed fund or evergreen funds, etc. Those are now opportunities that are there under the law. It has been there for a while. But you can start leveraging them because the regulatory environment is that much more clearer and the enabling frameworks have been laid out.
All right, Ashish, you made some very important points and about the path after, the dematerializing of AIFs. So industry still has a long way to go in completing this process and full adherence to SEBI's mandate of dematting AIFs. But what could it lead to and what could be the impact going forward? We'll discuss all that and more with our panel of experts right after this short break on Big Deal. Stay tuned. Welcome back. You're watching Big Deal and we are discussing the big process that the AIF industry has embarked upon, that is dematerializing the AIF units. What are the processes, regulations and what it leads to? So the bigger question from you, Ashish, you did mention that is there a pathway to listing these AIFs in future? Can that be achieved and is the demat of the first step probably towards it?
The provisions for the AIFs to be able to go down the path of listing already does exist. And it is just that the ecosystem was relatively young and it is now only coming to a phase of a decade plus of its existence. So relatively more mature. And I do anticipate that there will be funds that will explore eventually listing. And if you are having demat format issue, it definitely enables secondary transfers, etc. Also, it's apart from the hassle, the fact that somebody can go out there and get a closure done on a trade. Not that people invest in AIFs from a short-term perspective, but there are liquidity needs that people do have. So all of these things do enable some of these things more efficiently. Not to suggest that people have done it in a rampant way, but the reason is more around the stage at which the ecosystem is, in my lens, rather than any other factor. So yes, to that extent, it is a welcome step and definitely allows for future products and opportunities to be created around these.
Right. So, Rajeev, what do you think about the listing? Is that something that the industry will look at? Do you think that it will make the industry much more robust? And do you think that liquidity needs by way of pledging these units, all that can also be much easier? What is the benefit of that?
So I have a slightly different opinion about listing. I agree with what Ashish said on two counts. One is the fact that listing per se as a provision has existed for the last 10 years. The industry till date hasn't really felt the need for getting units listed. There are issues which I will quickly touch upon. Yes, pledging could be much, much easier than what is the process today. There's hardly any pledging of units today, thanks to the risks involved in physical statement of accounts and units. So if you see Regulation 14, it really talks about two or three conditions. One is it is only for closed-ended funds. Two is it currently talks about the minimum value to be 1 crore. The trading lot has to be 1 crore. Now, if you look at the fact that the total investment in an AIF, the minimum investment in an AIF today is 1 crore. Investors typically will start getting capital distributions. Now, even if somebody really wants liquidity, and which is one of the benefits of listing AIFs, I am not too sure how a unit value less than 1 crore will get traded on the exchange, because if the trading lot is 1 crore and the investors already got money out of that 1 crore that is invested, not too sure. Secondly, if you get specifically closed-ended funds, which are Cat 1 and Cat 2, valuation of the assets that the AIF has invested in is more or less done once a year with due permission from LPs.
Right.
So any transfers inter se or interim within the year, I don't know how far fair valuation or actually valuation on that particular trade will be done. So that's another question. So there are a lot of other issues in terms of how listing is really going to pan out and whether there'll be really benefits. So I think the need of the hour is for assuming that there has to be listing, and we have to really take the benefits of providing liquidity to investors. A complete framework has to be established by SEBI, taking into account all these current regulations that exist today and which potentially can, stop any active trading on units on the exchange.
Right. So two different views coming. What's your take on the listing aspect, Sidharth Pai? And of course, for anything to be traded, the entire regulation and framework will have to be created. There's a lot of work that will go into it, as rightly pointed out by Rajeev. But Sidharth, what is your thought?
So Nisha, I think you can actually see why we're known as the alternative investment industry, given the diversity of views that we end up having on any subject to end up actually bringing out, for that matter. I think listing actually has become a very, very unique opportunity. I don't think it's fully been fleshed out by the regulator as of now. As Rajeev also mentioned, the industry really hasn't seen the need. But I think there is actually a burning need for it as of now. The AIF regulations are roughly about close to being about 11 years old as of date. If you look at the growth of the AIF industry as well, the average tenure of a fund is anywhere between about 8 to 10 years, with extensions of 2 years each. So there is actually a need where we're seeing a large number of funds actually who have actually maturity as of now. They will have to end up actually liquidating their particular investments as of date, or whether there are any other alternative means that do actually exist. Now, SEBI came out with the liquidation scheme, which is also, they've also already come out with a paper on that. There are already ongoing discussions on that particular matter. But I think listing is something that the industry is actually looking forward to. I think it is actually worth having that particular debate and discussion as time actually ends up actually going bigger. Because even though the provisions, the regulations do actually provide for listing, the lack of clarity on the operational aspects, for that matter, even when you speak to the exchanges, is something that needs to actually be discussed. I think if memory serves, I think London and a couple of other areas do end up actually having these sort of vehicles. And the government has spoken very deeply about the need for actually permanent capital vehicles to end up coming about. Indeed, Sequoia US recently, I think in about 2021, 2022, did actually announce that they will end up creating a permanent capital vehicle to have permanent capital and make investments without having the pressure of actually liquidating their fund. I think the listing environment does actually create a very, very good avenue to end up actually exploring something else. So I think demat can actually end up becoming the first stage of listing, but we do need to have discussions, not just with the regulator, but the industry as well, as to how those guidelines are. A 1 crore minimum tradable lot, how do you end up fractionalizing? Whether we allow retail investors to participate, only accredited investors, discussions are worth having. But I think demat going live as of now, it becomes an easier discussion to end up having. And a major milestone has already been reached. So I think it's going to be very exciting times for the alternative industry. We will end up going mainstream because dematting is the most mainstream element you can do, and it will end up holding the industry in good stead.
Right. Your positive outlook on this, Sidharth Pai, is quite infectious. But of course, we'll wait and see how this process really pans out and whether it is versus the liquidation process, as Sidharth was mentioning. So lots to see as this path-breaking move and milestone gets achieved on the AIF industry about dematerializing the units of AIF. Thank you so much, Rajeev, Sidharth, and Ashish, for joining us on this interesting discussion. Thank you so much for watching us, to all our viewers. But stay tuned to CNBC TV 18.